A special edition of Ask Profit. I'm Smriti Chaudhary, and joining me today is Agam Vakil. Now, before we move on to queries, let's talk about a little bit about the markets that are in focus today. The benchmarks are down. However, the larger action is happening on the broader end, Agam.
Yes, certainly, Smriti, and it's not looking good. It's certainly not looking good when it comes to the broader end of the spectrum. But I'm going to start by taking a look at the Nifty. In fact, things have worsened for the Nifty as well in the last half an hour of trade, and it is currently down around 1.3%. It's not every day that you do see such a sharp correction, but it has come through. The Bank Nifty is holding on to just about a 0.5% cut, but the Nifty at the moment is looking at a sharper 1.3% decline. But, well, this show is specifically about the broader markets, the kind of correction that we've seen in the mid-cap and the small-cap indices, not just today. Of course, today has been an accentuated decline coming through, but this particular fall has begun over the last 3 or 4 sessions. So at least as far as the mid-cap index is concerned, if you consider the Nifty mid-cap index, that's down 3.4% right now, trading at, or rather near day's lows. And the small-cap index, pull up the Nifty small-cap index, that's down 4.2%. Now, naturally, considering the stocks involved are relatively smaller, there is relatively less liquidity, and hence the declines will be a lot sharper. We'll talk about a handful of names through the course of this show among where we are seeing deeper cuts coming in. But before that, let's get in my colleague Neeraj to get an assessment of what he is making of this broader market meltdown. Neeraj.
Agam and Smriti, I think it's a great idea to do this thing because so many people would have questions around what to do with the portfolios, especially when the small cap 250 down for 3 days on a trot. It's the single biggest 3-day decline since COVID lows, so to say. So in some sense, it's a tough situation out there, and most brokers that we speak to talk about there being lack of buyers more than they're just being exaggerated selling. There is also lack of buying that is happening, and as a result of which the falls are looking very, very sharp. Now, I'm sure the guest that we have on the show will probably give all the aspects around this, but one key thing that sounded interesting is that the stress test results coming out in 2 or 3 days from now, and the belief is that in some cases portfolios would have been adjusted to make the portfolios look a lot more conservative than what they otherwise would be, simply because now, because of the stress test displays, the portfolios are out there for scrutiny, and therefore before the 15 deadline, a lot of changes have been made. Now, you could argue that some of the stocks have also been falling because of that. Add to that this whole operation around a Dubai-based market participant and those stocks have it. So there are a number of concerns, plus the warnings given by the regulators and the regulatory action that has been taken on multiple financials. So put all together, a heady cocktail. No surprise that the markets have fallen. The pace has been very strong. Just one last point I'll leave you with. PCR at 0.67, 0.68. Usually the levels from which Agam would have a better insight here. But the markets tend to kind of bottom out or move up a little bit. It'll be interesting to see if we do that. If not today, then tomorrow.
Right. Thank you so much, Neeraj, for giving us that perspective of what is happening in the market and why it's happening, rather. So it's not just selling, but the lack of buying that is that has taken over the markets, and we're seeing sharp cuts there. And we'll take individual queries. But before that, let me introduce you to the guests for today. We have Sudeep Bandopadhyay, Group Chairman at IndiTrade Capital, and Kush Bora, founder of kushbora.com, joining us today. Thank you so much, Sudeep and Kush, for joining us. And it's a pleasure speaking to both of you. Let's start off with the queries. Now, we're getting multiple queries as we speak. The first one that we're talking about is the PSU stock IREDA, a recent kind of listing. So I'll come to you, Sudeep, on this. We have Rajesh from Tamil Nadu, who has bought the stock at 179 levels. The stock is currently trading at 127, much below than the buy price here. We've seen kind of expensive valuation around this specific stock as well. But now that we're seeing cuts in the market, what would you suggest to somebody who has bought the stock from a longer term perspective?
Is that for me?
Yes, Sudeep.
I think, as a fundamentally, it's a great company and, it's a recent listing. But the way the valuations had gone up was a bit unrealistic and it was looking stretched even then. I think this gentleman bought the share at an elevated level. And it was definitely, ripe for correction. Probably it was waiting for a reason to start correcting. And I think what is happening in the market, and as Neeraj explained, I think that has accentuated the fall in this counter also. But if the gentleman is willing to wait for a long term, I don't think there is a problem as such fundamentally in the counter. But he has to remember that he has bought it at a very high level. So if he can, maybe it will be worthwhile for him to look at averaging and not rush into averaging straight away now, but keep a close eye on the counter. And at if it stabilizes at some level, maybe he should average. Why I'm giving you this advice is because the stock is a good stock. There is absolutely no problem. It is in the right space at the right time. The only problem for this gentleman is that he has bought the first lot at a very high price.
Okay, well, averaging is one option. As to how you can, in fact, go ahead and deal with IREDA, a very recently listed company coming through. We move on and talk about Indian Overseas Bank. This is one of your other PSU banks which has potentially run up off late, and we have Harsh Kumar, who holds about 1,750 odd shares at a price target of at an entry price of around 68.55. The question that he asks is, should he hold or exit Indian Overseas Banks? Let's pull up the stock and see where it's currently trading at. It is in fact at 57.45. So he's sitting on a reasonable amount of losses at the moment. The quantity is also not that small at the way we see it. Indian Overseas Bank, one of the less traded public sector banks of late. But I'm going to, direct this query to Kush. Kush, good afternoon. Thanks for joining in. What would you suggest to Harsh Kumar that he do with Indian Overseas Bank, considering he's looking at a potential loss at the moment?
Sure. Hi, Agam. First off, a very good morning, a very good afternoon to you, to all the panelists and the viewers. If I can just take a quick 30 seconds. Despite the kind of dip that we are seeing in the mid cap and the small cap, the indices from last March to date till date today, the mid cap index is still 53% up and the small cap index is still 60% up. So that's the kind of run up that the indices already had. A lot of these queries will be for those who entered last in the rally and hence are seeing the pain. My overall view or overall reading at the moment on the mid cap and the small cap space is that don't sell in panic. We've always heard buy when everyone is selling and sell when everyone is buying. If you can't buy at the moment because your capital was 100% or perhaps in some cases more than 100% blocked, at least don't sell when everyone is selling. So hold on to these positions. The waiting perhaps might be a little longer, but a lot of these good names at least will rebound. That said, specifically on IOB, my suggestion is very similar to what I just mentioned. Hold on. This is not a stock which actually ran up a great deal, except for the last rally where the entire PSU pack and the PSU bank specifically rallied. So this stock too is taking support nearest 20-day, nearest 50-day moving average. There's a possibility that it might slip a little lower to say about 53 kind of levels, but then strong support does emerge. 68 is a slightly stretched number and the 20-day moving average as well. So the stock could see a bit of a rebound. The waiting period might be a little longer, but my suggestion would be to hold on to this one. A strong positional stop loss comes in at 50.
Right, understood. Let's move on to the next counter. We're talking about Suzlon. Now, this one's from Pratik, who's writing in from Mumbai. Sudeep, we've seen a turnaround story in this stock. Pratik hasn't mentioned the buy price here, but from a longer term perspective, based on fundamentals, would you suggest holding on to Suzlon?
Absolutely. I think, as you rightly said, this is a turnaround story. And, from a long-term perspective, this definitely worth a hold. There are a couple of things one has to remember is that this is a sector, this company operates in a sector which is the focus, absolutely big focus. The policy of the government and policy globally for governments have been to encourage green energy, and wind energy is one of the areas which definitely is a focus area. Suzlon has been one of the pioneers in this space as far as Indian market is concerned. And I think, after they turn around and the way things are moving for this company, as well as the entire wind energy space, it is definitely worthwhile holding on to this stock for long.
Okay. All right. That's as far as Suzlon is concerned. We have yet another query, and this one is from Rajesh Maheshwari, and he, in fact, writes to us from Singapore. He says he wants a short-term and a medium-term view on hospitals. What's the outlook here? Sudeep, I'll direct this question to you. How are you positioned when it comes to the hospital sector? I reckon, considering it's a short to medium-term outlook, it would potentially be within the next 12 months.
I'm very bullish on the entire hospital space. One has to remember that the recent Supreme Court direction to the government to fix, uniform prices across hospitals was a bit harsh and unrealistic. I think government has 1 month's time to respond, and I'm sure they will go back with some kind of a response. What we understand is that, there is a thinking that it has to be differentiated for different categories of hospitals, differentiated for different kind of treatments, and also, a whole lot of differentiations. And standardizations will happen only after the differentiated benchmarks are established. So the primary reason why the hospital stock corrected was because of the Supreme Court directive. To my mind, we don't have to read too much into it. First of all, as and when this directive gets adhered to, it will be with a lot of checks and balances. And number two is it will take a long time before this can get implemented. So hospital stocks after correction definitely look good. Even before correction, for long-term investors, they were looking good. I think there is a lot of consolidation and a lot of activity happening in the hospital space in India, and definitely worthwhile investing or remaining invested in the hospital space.
All right, got it. Let's take one more query. We have this one from Thomas George. He's writing in from Kochi. And Kush, I'm going to take this to you. He bought Kei Industries at slightly elevated price of 3,335 a piece. Now, the stock is down about 6% as we speak. And there are definitely jitters that have taken over investors. And the question here is, should you average out of the stock, or should you hold on?
Well, so not a big fan of averaging. So wouldn't really recommend that, at least right away. Once we see some kind of a rebound, perhaps then. But to answer that part of the question, whether he should hold on or not, the very clear answer is yes. However, if it's a trading bet, so a positional stop loss would come in at about 29.50. But if it's a medium to long term kind of a investment, then my suggestion is hold on to this one. And this is also one of those candidates that would perhaps revive a lot faster than the others.
Okay, there you have it, guys. But on that note, we're going to slip into a short break. But on the other side, we're going to get you a lot more queries coming in. Stay tuned to NDTV Profit. Be back in just a bit. Welcome back to the special edition of Ask Profit. We are taking queries from our viewers, specifically because we've seen such a meltdown as far as broader markets go. And in fact, it's not just the broader markets. We have seen the Nifty lose out on the 22,000 mark as well. And it's turning out to be a tough market, not just for mid-cap and small caps, but also some of your relatively larger names. That said, let's take a look at some of more queries which are coming through, and there is one more around Geo Financial Services. We have a query from Jayesh, and he wants to know what we can do with this one. Kush, what is your assessment of Geo Financial Services? Long term, short term, how would you address this one?
Buy more. The stock's actually seen quite a bit of a run-up. There was a negative divergence that was visible towards the peak yesterday, and we're seeing a bit of a profit booking round come in today. My suggestion would be to add more. Maybe not jump into the trade given the kind of fall that we're seeing today. But once it stabilizes somewhere close to 315 kind of level, 320 kind of level, it should be a good entry point once again. So Geo Finance, we're fairly bullish on this one from a medium-term perspective and a long-term perspective as well.
All right. Kush, you're talking about Sangi Movers next. This one's from Amit Rastogi. Now, if you look at the stock chart of Sangi Movers, seems to be in a bit of a downturn since the last at least a month. But if you look at the one-year performance, it's been a multi-bagger. So would you suggest accumulating Sangi Movers?
Sure. Hasn't that been the story for a lot of stocks, from this space and the mid-cap and the small-cap space? Here, the stock is currently taking support at its 50-day moving average. It's not a bad idea to start accumulating. 950 to 970 is a strong support zone, and we're seeing the stock respect that. Previously, also, we had seen a bounce from those levels. So I wouldn't suggest go, all in at these levels, but it's a good time to start accumulating. If it does break, this 950 support zone, it could fall a little further. But this will also turn out to be a buy on dips kind of an opportunity. So Sangi Mover, not a bad idea to start accumulating at current levels and add more, as it slips a little lower.
Okay, and yet another one on Bagm Mines. This one needs we have KS Vijay who wants an outlook on Bagm Mines. Let's pull that up. Let's see what it's doing. And it's been, in the back burner of late, but it's currently, of course, down about 5% as well. Kush, your view here?
Not really too constructive. The strong support zone comes in at about 2015 rather. If I just round it off to, let's say, 2000, very close to the support zone. If it does break, it could accelerate, the down move could accelerate further. So from my perspective, this space entirely hasn't done well, hasn't really even participated in the up move that the market saw, except for a spurt. So my suggestion here would be to avoid this for now. If it does take support at around 2000 levels and shows any kind of a rebound, we might perhaps reconsider, but not at the moment.
All right. Thank you so much, Kush, for joining in and for answering so many questions for us. And viewers, hope this special edition of Ask Profit helped you, especially in a meltdown of a market that we're seeing. But don't go anywhere. Lots more lined up on NDTV Profit. Stay tuned.
Thanks for tuning into India Market Close, and it's close to the day's low. Dragged down not by banks this time, but by the broader end of the spectrum. The pain really is not as much in the Nifty as it is in the mid-caps and the small caps. I mean, just look at the real estate index, and that tells you a story. 7% lower. Maybe I shot myself in the foot when I said that there could be buying at lower levels, because for now, there doesn't seem to be any kind of buying in this bucket. But anything which is high beta is correcting. Look at the PSUs, for example, and high quality, low quality doesn't matter really. Everything is getting smashed. 6.5% for the Nifty PSE as well. And just get the heat map up on the screen for the large caps at least to start off with. 4 or 5 stocks in the green, everything in the red. ITC is holding out, yes, even that's off from the highs of the day, but still holding out 5%. But out here, there is just pain, and economy facing stuff is taking it on the chin, from a Coal India to the Adani Twins to Power Grid, NTPC. Everything related to the economy is really coming off very rapidly. I mean, I see no point in talking about specific points, but for the fact that maybe IT is holding out a little bit, ITC is holding out a little bit, but everything else seems to be smashed to smithereens really in the session today, particularly the small cap end of the market.
Yeah, I mean, the broader end of the market is hurting more, perhaps because it also ran up more and it doesn't have an ITC, which is like one sole survivor, sort of, naag bacha raha hai bazaar ki, I would say, about 5% up. Look at that advanced decline move and the gap only widening. You're at, a bit of concerning levels on the index. Nifty under 22,000 right now as we speak. We pulled up the small cap indices as well, but specific, which are the biggest pain points? PSU stocks Neeraj spoke about, and that mood has turned for a while, but an SJVN, NHPC, Cochin Shipyard today, part of the top loser list, between 9 to 10% hit on these counters in closing trade. Reality stocks, of course, everything is beaten when you have the entire index 6.5%, but again, 8 to 10% down on a Phoenix Mills and iBulls, a Prestige. One wonders where the pain points really are in micro caps as well. I mean, how much stock specific can you speak when everything seems to be red? Really, the question is, which shade of red are you seeing today? So Paisalo Digital, for example, 20% down. Railtel, HCC, all of them having a pretty bad day. Now, the question is, what has happened in this market? And today we have a very special show lined up for you on India Market Close. We have some of the top speakers, market voices today packing all of that for you. But Neeraj, like we were speaking just before we hit the show, a combination of factors, perhaps electoral bonds, those details are going to be out, could have some nervousness, which is why you're seeing a lot of economy stocks and government-run sort of stocks saying pain. You could have some nervousness about the fact that mutual funds want to redirect towards larger caps, and 15th of March is when their stress test is also out, and maybe a combo of those factors.
In fact, let's pose those questions to Harsha Upadhyay of Kotak Mahindra AMC. He's with us on the show. Harsha, good having you. Thanks for taking the time out. What's your sense, Harsha, of the kind of pain that we're seeing? What could be the underlying reasons? Surely it's not just the valuations.
Neeraj, I think predominantly it's valuations and the kind of euphoric rise that we had seen in the recent times. Obviously, there have been few other factors which have come at this point of time, just what your anchor was mentioning. So all of those could have had a little bit of hand in terms of creating this kind of reaction in the market. But first and foremost, I think we have been discussing this for quite some time now, isn't it? The stocks have gone up crazily in the recent times, and not in all cases they have gone up with support of fundamentals. So that's where the pain is going to be as we go ahead as well.
Harsha, one of the talking points that came in today was also that in some of the mid-cap, small-cap portfolios or otherwise, because the stress test is around the corner, would portfolios have turned a bit more conservative since the results to be declared, so on and so forth, in select cases, etc. So do you think that could be a reason?
No, I do not think that's the reason, Neeraj. These are the numbers which were anyways coming out in fact sheets and other communications that we were doing in the past. There are a few other things which were not in the public domain, but most of the mutual fund houses in their investment committee meetings or in their internal meetings, I'm sure would have discussed. We were doing that anyways at our end. It's just that all of that is getting collated in a standard format and it's going to be put on AMFI website. There is no other difference. So I don't think because of the disclosures, there is going to be change in the portfolios, etc. That's unlikely to happen.
Having said that, Harsha and Tamanna here, great to speak with you, though on a bit of a troublesome day. Nevertheless, yes, the stress test was expected, being prepared for, but there is a sense that mutual funds are now redirecting. You've had one player just very recently stop lump sum investments in small cap funds. I just want to get your sense of whether that's a direction that the industry will follow, and that review of sorts is something that's affecting the market sentiment as well.
It's very difficult to say that everybody in the industry will have same view on the valuations or on the market conditions and will take the same view. Yes, there have been few funds which have done that, but I don't think we can generalize and say that nobody is going to accept money in small caps or mid caps and only large cap funds will be open for subscription, etc. That's an extreme reaction, I would say. That's unlikely to happen.
So I'm not saying that no one will accept money in small caps, and even these funds are continuing to accept SIPs. They've capped them at 2 lakh rupees. Just want to know your take, Harsha. Right now, looking at the regulatory overhang in certain sections, the push of retail investment protection and that kind of zeal that's coming in. For you, do you think that small and mid caps are looking fundamentally risky, or have you become more picky?
See, they have always been more expensive compared to large caps for the last several